Hey guys, hope you are all having a great day. Today we had the AMC earnings report, and it was even more bullish than anticipated. The subsequent price action we saw in the after hours while the report came out was perfect evidence of market manipulation. We are going to talk about everything that was discussed along with what the earning reports had to show. AMC is a thriving business on its path to recovery, and 2022 looks even brighter than 2021 ever did. We also have some other minor stuff to go over, so let's not bear around the bush and get straight to it. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Let's begin with the facts. AMC's fourth quarter of 2021 represented its strongest quarterly results in 2 full years. Total revenues for the theater giant grew to $1,171.7 million compared to $162.5 million for the fourth quarter of 2020. Net loss for the fourth quarter improved to $134.4 million, including a non-cash impairment charge related to long-lived assets of $77.2 million, compared to a net loss of $946.1 million for the same quarter a year ago, which included a non-cash impairment charge related to long-lived assets, definite and indefinite-lived intangible assets and goodwill of $466.1 million. Fourth quarter adjusted EBITDA improved $486.7 million to over $159 million compared to an adjusted EBITDA loss of $327.5 million for the fourth of 2020. Net cash provided by operating activities for the fourth quarter was $46.5 million, and operating cash burn generated was $224.4 million. Available liquidity in cash and cash equivalents at December 31, 2021 was approximately $1,801.6 million and $1,592.5 million, respectively. As you guys can see, the numbers point to one reality and one reality alone: AMC isn't going anywhere. CEO Adam Aron had some important statements to make, which I will repeat verbatim here. AMC's fourth quarter 2021 results represent our strongest quarter in 2 full years, with positive adjusted EBITDA of almost $160 million, operating cash generated of more than $220 million, and finishing 2021 with a record year-ending liquidity position of more than $1.8 billion. Our positive recovery glide path from the global pandemic continued in earnest in the fourth quarter. While not yet where we want to be, our progress is substantial and unmistakable. The quarter offered moviegoers a more robust and appealing film slate that culminated with the exclusive theatrical release of the now third highest-grossing movie of all time, Spider-Man: No Way Home, despite having been released at the height of Omicron fears. AMC took advantage of the robust fourth quarter film slate, pent-up consumer demand, and a bold advertising campaign, among other important marketing initiatives, to attract some 60 million visitors to our theaters around the world during the fourth quarter. That was a 7-fold increase over the fourth quarter of 2020, and a 50% increase compared to the third quarter of 2021. Our record year-end liquidity positions AMC well for continued recovery from the impact of COVID and provides AMC with the financial flexibility to opportunistically grow and innovate as we seek to transform our business. To that end, during 2021 and early in 2022, AMC has been adding what we expect will be nicely profitable theaters to our network both in the US and in international markets, launched 4 separate NFT programs, accepted cryptocurrency for the first time, and announced AMC's entry into the multi-billion-dollar retail popcorn industry. As we have repeatedly said, with the monetary war chest that was provided to us by our shareholders in 2021, AMC is no longer on its heels. As COVID case numbers are finally declining and vaccination numbers increasing, as our operating results are markedly improving, and as our healthy liquidity allows, AMC is playing on offense again. Another component to financial flexibility is the opportunity to improve the company's capital structure, and in February we did just that with the successful offering of $950 million of senior secured first lien notes to refinance high interest rate debt at lower rates, while extending maturities to 2029, and we will continue to seek opportunities to strengthen our balance sheet during 2022, with a keen eye to lowering our interest expense, extending our maturities and opportunistically deleveraging. The fourth quarter of 2021 proved once again that moviegoers want to see movies in theaters. We are quite bullish that for the full calendar year of 2022 the industry box office could be nearly double that of 2021, with COVID impacts easing, with more and more major films on the docket for release, and with most major studios coalescing around an exclusive theatrical window of 45 days or more. Bookings are very strong for The Batman, which opens this weekend, and we have movies like Top Gun Maverick, Jurassic World Dominion, Black Panther Wakanda Forever, Avatar 2 and many others that will excite us all this year. We should point out, however, that the box office pacing and our results in 2022 are expected to be heavily weighted towards the second half of the year. The January and February domestic industry box office numbers are already known. While they are more than quintuple that of last year, they are nonetheless well short of pre-pandemic numbers. While no one has a perfect crystal ball, it would seem that more blockbuster activity likely will come starting in the spring and summer of 2022, continuing through year-end. With these statements, we get an insight into AMC's perception and plans into this new year. There is a lot of popular movies that will be coming out, which means that there will be much more money flowing into AMC. During the second part of the earnings report, Adam Aron addressed some of the investors' questions, and we got even more bullish statements as to the current standing and understanding of AMC as a whole. We are going to go over all those extra statements tomorrow though, since there was a lot talked about that we need to break down. For now, let's talk about the stock market. Stocks fell sharply today and bled out throughout the entire day as the situation around Russia continues to intensify. Vladimir Putin has been met with every foreseeable sanction and countries are still saying that they have plenty more coming his way. Russia's economy is all but done at this point in time. The S&P 500 fell 1.55%, the Dow Jones Industrial Average plunged 1.77% and Nasdaq tumbled 1.59%. The pullback was so big that it even reached the Treasury Index, which caused it to fall 1.7%. This is recorded as Nasdaq's worst January since 2009 during the last market recession. Investors were watching the news, seeing Russia escalate their efforts to try to win in Ukraine by sending a 60-kilometer, or 40-mile, convoy of trucks and troops into Ukraine's biggest strongholds. With the things intensifying in Ukraine, investors also have to put up with the fear and uncertainty of what Jerome Powell will say in tomorrow's committee. We are to see how the Fed plans to tackle inflation, with rate hikes being the primary tool expected to be used. What is really going to make it or break it tomorrow is the magnitude of the rate hikes. Like I said, if it's around 25 basis points or so, we could see more volatility, but it won't be as bad as if it's a 50 base point change, which will easily have investors selling off. Investors argue which of these two scenarios is more likely to happen. The Fed now has to account for what is happening in Ukraine so as to get the rate hike correct and not cause more damage to the economy. I do still think the rate hikes are going to be higher than 25, and if you put a gun in my head and ask me to choose which one would it be, I would pick 50 base points. However, do know that nobody knows what it's going to be and that it's honestly a 50-50 chance right now. Stay zen, without any expectations, and just prepare for the worst. I personally have a nice war chest of liquidity in my bank account sitting in the event we slide down real bad. This is going to be a very crucial and turning point in the economy, so be sure to stay alert to anything that comes out in the news. Every investor in the world is going to be closely watching and monitoring the situation. If you have open long positions, be prepared to set your stop losses because if the numbers are ugly, it could screw up entire accounts. Let's now talk about today. The Fed submitted over $1.552 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 48% of the total volume today, while dark pool trades for GameStop accounted for 46% of the total volume today. AMC had a larger amount of buy orders than sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC had a bearish performance, losing over 2% for the day. It began trading fairly neutral in the pre-market. Upon market opening, it quickly climbed to 19.43, the highest point it would reach today. After this run, AMC began experiencing what I would consider a perfect case of extreme short manipulation. It began selling off with the price kept exactly at the lower band of VWAP for about 20 minutes. After reaching 18.40, AMC bounced up above the VWAP for a short brief period before singing back below the lower band of VWAP. After reaching 17.85, AMC began trying to push back up, but shorters ensured it remained as low as possible. AMC closed at 18.32, below the VWAP. In the after hours, during the earnings, AMC became very volatile. But even these great earnings did not help push the stock back up, as the price would at multiple times actually sink lower than the closing price, which is at 18.32. As for tomorrow, I am not going to say anything because tomorrow could be incredibly volatile and very unpredictable depending on what comes out of Powell's mouth. GameStop had a bearish performance, losing over 3% for the day. It opened to a fairly bullish trading session. It jumped above the VWAP and appeared to be strong and set for upward movement when shorters started hitting the stock and forcing it back down. GameStop would somehow fall below the VWAP, and in some minutes experience little to no price change at all. It was clear that this wasn't organic movement, and that algorithms were what was moving this stock up and down all day. GameStop continued a descending path for pretty much the entire day, eventually falling beneath the lower band of VWAP again near the closing hour and ending the day at 119.02. Same as I said for AMC, as for tomorrow, it's impossible to talk or even predict what will happen. It was a terrible trading session today, but an incredibly bullish day for long-term investors of AMC. Tomorrow I will dive deeper into some of the things discussed. Now we await for GameStop's earnings report. Thank you for making it to the end of the video. That is all I have for you guys today. Let me know your thoughts down in the comments below. And most importantly, remember to come join my Discord. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.